All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market off to a pretty flat open, and nothing really changing. Market wise, it's just kind of sitting out there. I know there's a lot of talk about the market and this concept of it's going to blow off the top, or the market's going to melt, and everybody's got an opinion about the market, right? But the reality, when we look at what's going on, we're not seeing any real change happening. So we expect to continue what has continued until some signs show something different here. Now let's start off with the challenge. We have FCX and Netflix. I filled in the prices that were just about 60 seconds ago, and you can see we're just not really going anywhere. FCX up just a little bit this morning. Netflix down just a little bit this morning, but neither really getting anywhere that's going to be, material gain for the challenge. Where it sits. Would love to see some Netflix follow through to yesterday, yesterday's action, but we do need to see that follow through to, really see gains, pile into that option. But right now, neither option or neither position is at its time stop or near a price stop or anything. So we'll continue to hold both. Now, there are no new signals on the board here this morning. We do have some things showing up on the scans. The one that's the more full scan here this morning is the bearish scan. We have 8 stocks with downside 3-7 crossovers. Now, Home Depot and Kohl's both are dealing with earnings. Okay. AT&T, nasty downgrade on AT&T this morning, a really nasty downgrade on it, and one that calls into questions AT&T's ability to hit their, hit the marks that they have projected for the coming, for the future here in terms of earnings and revenue. So pretty nasty downgrade creating that. Valero, which was on this list yesterday, rallied into the close, now selling off this morning, so is on that list. Dollar General, let me show it to you here. But we have Dollar General, we have Delta, and both are more in consolidation positions than anything. And so nothing signaling here. Bristol Myers, but not signaling. On the upside, we only had one stock, and that was Twitter. Let's see what it looks like now. Yeah, Twitter's no longer on here. GLD is on here. It's been picking up a little bit this morning. I would love to buy some GLD. In fact, I've been looking each day at, can I put a position on? Can I put a position on? Is this the opportunity to put a position on? And I haven't done it yet. I guess I kind of want one more drop, and maybe I'm being a little too picky, but a little bit upside action on it. Probably won't qualify as a challenge trigger, even if it does cross up, simply because we're dealing with lower highs and lower lows. But, we'll see how that works out as the day progresses. Okay, so for the challenge, continuing to hold Netflix, continuing to hold FCX, and, we'll see what those, turn out to do. It was nice to see the gap up on FCX, but, man, it just couldn't hold at all. We've seen that across the industry, and we've seen that across stocks today. I mean, Boeing, we've seen a lot of things that gapped up, really kind of get sold off. Here, which is what, it's generally just a sign of market that doesn't, it's not willing to chase. It's not willing to, to get too far ahead of itself without some sort of catalyst. All right. Now, there are a few stocks I want to go out and take a look at. All of these stocks have been requested to go take a look at here, except for the last one. But let's go start with Under Armour. And Under Armour here is on the challenge watch list. This is one that has now had 2 earnings that were ouch and have created some big angst for investors when it comes to the stock. If we back this out to a longer-term view on a weekly chart, it's back down to these 2018 levels the company was trying to transform, trying to get away from this, but the last couple earnings have, really, really hit it. And, if we go in and we take a look at just some of the fundamentals when it comes to Under Armour, I think that's kind of where you have to look and say, all right, fundamentally, has the story changed here for Under Armour? And so let's come into a couple metrics. So let's just take a look at valuation. Price to book, it's 3.2, right? Now, this is something where when it was making the lows, it was below 3, so it's not, historically low, but it's pretty darn low, right? What about price to sales, which is a better look at something like an Under Armour? Well, 1.3, you know what? Not really giving us much, to say, well, this is at a really interesting price to sales level. So let's go price to earnings, right? Do we see anything here? No, nothing really all that interesting here, in the metrics. And that's very common for Under Armour when we look at it and, look at the valuation metrics, because it's just not a stock that trades off of valuation metrics, right? What's it trade off of? It trades off of revenue. And here's what's going on with the revenue. The revenue has had a really nice, had this really nice move here, right? But, then what's it done? It's just kind of leveled off, and they're not really in a period of high revenue growth for the company, and that has been, hurting them. That has been a negative for Under Armour over the last while, and we're not seeing that element pick up. And if we come into something like Estimize, and we come in and we look at the the revenue numbers here for Under Armour, what they're projected to be. Let's come in here. There we go. Revenue. You can see that they were in this 4%, 6%, 8%, 3%, but the last 2 quarters have really fallen off. They're projecting 5, 3, 4, 6. So, they're projecting some nice revenue growth, and if they hit these numbers, they're going to be rewarded. But after misses the last 2 quarters, the market is in a show me position. You prove to us that you're going to beat on it before we invest, before we put our money here. Earnings, that's just not something that really drives or moves the needle when it comes to Under Armour. It's this revenue. And so what do I expect to happen with the stock? Well, after the last earnings, I made the comment that I expect this to be a stock that has trouble, finding buyers, right? 2 earnings in a row, it's going to have trouble finding buyers. I do think there's a very good chance that as it goes into its next earnings period, that the stock is trading between 17 and 18 bucks. I know, that's what? 2.5 months from now, and so to be trading in this range for 2.5 months, it may break higher and then drop, it may break lower and then pop, but I don't expect it to get too far away from this level. Now, for me, Under Armour is one that I will take a look at going into next earnings season as a possible earnings play. Do I get a chance to buy some cheap calls? Because I do think that when you look at Under Armour, the overall tone of the stock here has been very negative, very pessimistic. And so, that's the side that could get wiped away very quickly with the halfway decent earnings report. So for me, that's when I trade earnings, I want to see that, something is biased one way, and I want to play a possible change in that bias. Not that I think it's absolutely going to happen, but I know if it does, the price movement can be very, very aggressive here. But they're not going to report earnings till February next year. So it's nothing, nothing coming in anytime soon here. But anyway, that's Under Armour. If I see news that there's some revenue acceleration, I'm much more interested in being a buyer. But until then, not really. Their stock is almost 10% shorted, right? That's a big number. right? That is a very big number. And one thing you know about heavily shorted stocks, they tend to go down. And I know, people look at heavily shorted stocks. They want the short squeeze. They want to say, well, it's going to pop because the shorts are going to come out. And yeah, that does happen when the shorts start to come out. But the shorts need a catalyst to get out of there, right? Until then, they're going to stay in. They're going to keep pushing the stock lower. And, that's what that's what we see happening here with Under Armour right now. Okay. All right. So that's Under Armour. Facebook. I was asked, about Facebook chart, and Facebook chart is one of the best charts in the market right now. It really just has some very nice elements to it. This just period of higher lows, right? Just gentle higher lows, nice little rounding pattern here that has come into play with Facebook. Nice volume accumulation here in November. They've been dealing with some issues. They've put a lot of those issues behind them. It's one of those where they're just look. They're here to stay. And there's a lot that can be made out of Twitter and some of the advertising faux pas and all of that. But long-term Facebook continues to be here to stay. They've stabilized a lot of different things, and this is a stock I fully expect to push into some new highs and push into that 240, 260, 280 area. And right now it is definitely one of the better charts that's out there. If you're looking for a short-term type play, I'd just be a buyer off the 7-day moving average, right? It's not something I get, too caught up into fundamentally and say, well, I really like it fundamentally, so I'm going to buy it and hold it no matter what, because it could pull back to this 200-day moving average before making the next move higher. So, from a short-term trade, just that 7-day moving average, is the level that I would look at and say, that's the level I want to see hold there. Okay. All right. Last week I mentioned that I had some SPY puts or put on a SPY put spread, and right now I have more upside exposure in the market than downside, and I'll continue with that. So please don't take these SPY puts, this SPY put discussion as, I'm bearish on the market, right? Now, the market, until we see it break the 7-day moving average, or until we see some of the metrics change, it's not going to go down. It's not going to see a big, wipeout sell-off, and it needs that catalyst for it. Now, that catalyst could come in at any time, and, we could speculate till the cows come home about what that catalyst could or possibly might be. I'm going to sit back and wait, and if it happens, then I'll react. But I did put on a SPY put spread because of the seasonality, right? And we talked about this November seasonality with the market and the Santa Claus rally, and that Santa Claus comes in November. Right, for the markets, in terms of if you're talking about Santa Claus being bullish and a rally, in the market that's consistent every year, well, Santa Claus rally is November. It's not December, and I know every little bump up in the market in December, the market goes, ooh, Santa Claus rally, Santa Claus. But November's the Santa Claus rally. We showed why, 2 weeks ago. And, but it's one where we have seen some heavy sell pressure come into the markets in December, right? Where Santa comes in November, takes off in December, and we see some significant selling in December. And so I set some puts up, or a put spread up on the cheap for that. Now, what price target am I looking at for that? Well, let's go take a look. And for me, when I'm setting something up like this, it's very easy in terms of price target. And basically all I did is put on a Fibonacci here of the last kind of consolidation, right? And then put on a Fibonacci extension of, where a breakout would likely take it, right? And the Fibonacci extension suggests 313 on the SPY. Right, 313 on the SPY. We're almost there, right? We're almost there. And so that's the extension mark. That's the that's the mark you would expect to hit from the Fibonacci's here. And if we come in, now I'm going to come and say, all right, we have 313. Let's take a look at what the retracement is of the rally from that extension level. Well, the first retracement's 302, right? So what do? I set up my put spread for the market to go down and hit 302. And I put on something where, if it hits that 302 level, it pays me off, or pays off pretty nicely. And, I don't go get into something that's super expensive or, pay up aggressively. And for this one, I haven't put on a position that I don't expect to lose, right? And I do that a lot. I know I take some heat for it, especially when I talk about them. But I'm never one that's shy of a position going to zero. And I always look at a expiration month that if I don't have a position that goes to zero, I had a bad month, meaning I wasn't aggressive enough. And so it's just one where that's what I did. That's what I put on, with that expectation that, it might go to zero. But, if it does pay off, it's going to pay off and erase 8, 9, 10 different zeros, from before. So I won't put on more major put exposure on the market unless we see the metrics turn, unless we see the 7-day moving average break, unless we see some of those elements start to come into play. And we simply have not seen those elements come into play yet. All right. Now, last stock I'll show, and this is one I haven't been asked about, but I mentioned, but I wanted to show it. I did go grab some Visa here this morning. I can't do it for the challenge. It doesn't have a challenge trigger, but this is one that we've been watching close, and all month it's been bumping up on 180, 180, 180, sell, sell, sell at 180. This morning it jumped and broke 180, and saw some pretty good buy pressure, so I jumped on in, and something that I do expect to push on higher. I'd equate this chart to Microsoft. We saw Microsoft, just after the earnings, just flat. Couldn't go anywhere about a 2.5 week period. Then gets this nice $2 jump, breaking it out. And you can see the breakout hasn't exactly been, this meteoric rise. It's been just slow, steady, a little bit each and every day. But after about 2 weeks, you can see nice little breakout, and that's about what I'm expecting from Visa here. And so just one of the better charts out there, one of the nicer type of breakout elements, and the stop works very easy. 180 is the stop level. In fact, you can even tighten that up to today's low, 180.18. And sets up for a pretty nice risk reward if you're looking for, a stock that is showing signs of wanting to break out into a new high. It's finally consolidated for about 3 months, and when you look at the metrics, you look at the earnings, it is a stock that can justify a 220 to 240 price target without having to make a big fancy argument for it. So anyway, Visa, very interesting one out there. One of my favorites, out there with it. Okay. Now one more here. Sorry, I didn't note this in the title, but Chesapeake Energy. Chesapeake Energy continues to fall off. I mentioned back when we talked about natural gas in October that I would not play natural gas higher using Chesapeake Energy, just simply because this is a company on the verge of bankruptcy, and we have heard the company come out and say that they're not going to go bankrupt, that they're solid. We even heard the term "too big to fail" be tossed around with Chesapeake Energy, which is wow. But one of their major shareholders, who has 13% of the company, has done some distributions, and it is just a fire sale right now with Chesapeake Energy. This is a stock whose shares are going to go below a penny. right? They're going to go below a penny. Yeah, could it bounce up to $1 first? It sure could. But this is one that definitely has bankruptcy, written all over it from the price action. How long is that going to take? Is always the question. But I would not be surprised to see, those proceedings ultimately take place here, and for Chesapeake to basically go out, spin off their negative assets, use bankruptcy to get rid of their non-profitable assets, and condense the company down in a significant way to be able to just churn profit quarter after quarter. But the reality when it comes to natural gas is natural gas, it just doesn't pay. It just doesn't really pay. It's not of great value. This is a commodity now that has been sitting down in this $2 level for years, right? Yeah, it bumped up to 5 in 2013 and had a little bump in 2018, but been sitting down here in the $2 level for many years. And it's just not profitable for companies at that level. In fact, you look at some of the major oil companies and what they're doing, with the natural gas out in the oil fields, they're just burning it off. It doesn't. It's not valuable enough to collect it and sell it, so they just burn it. And yeah, there are nat gas fields and stuff that it is profitable to collect it and sell it, and it's obviously needed, to some degree there, but. Yeah, it's just a business that continues to fall. I suspect will continue to fall, especially with a lot of the new technologies that are out there, just making it so that anytime you're hunting oil, you're getting a ton of natural gas to go with it, and the amount of natural gas out there is just it's just crazy. Just a huge amount there. So not something where, or not an industry where I expect the supply demand dynamics to shift or to change here anytime soon. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.